Hello, traders! Welcome back to our channel. Today we're diving into a powerful tool that can elevate your trading game, the Linear Regression Channel Indicator. In this video, we'll cover everything from what it is, how to set it up in TradingView, the best settings for various time frames, interpreting buy and sell signals, using it with other indicators, and essential risk management tips. What is the Linear Regression Channel Indicator? The Linear Regression Channel is a statistical tool that uses linear regression analysis to plot a channel around a trend. It consists of a middle line, the linear regression line, and two parallel lines equidistant from it, representing the standard deviations. This channel helps traders identify the trend direction, potential reversal points, and areas of support and resistance. How to set it up in TradingView. Open TradingView and select the chart you want to analyze. On the left toolbar, click on the Indicators icon. Type Linear Regression Channel in the search bar. Select it from the list, and it will automatically apply to your chart. Adjust the lookback period and standard deviation settings as per your preference. Best settings for different time frames. Short-term trading intraday, use a lookback period of 20 to 50 bars. This will make the channel more responsive to recent price movements. Medium-term trading, swing, a look-back period of 50 or 100 bars is ideal, providing a balanced view of recent and past price actions. Long-term trading position, opt for a look-back period of 100 to 200 bars to capture the broader market trend. Interpreting buy and sell signals. A buy signal occurs when the price touches or slightly breaks below the lower channel line and then rebounds upwards. It indicates a potential buying opportunity. A sell signal occurs when the price touches or slightly exceeds the upper channel line and then reverses downwards. It signals a potential selling opportunity. The middle line, regression line, acts as a trend indicator. If the price consistently stays above it, the trend is bullish. If below, the trend is bearish. Using it in combination with other indicators. Combining the linear regression channel with other indicators enhances its effectiveness. For example, pairing it with the moving average convergence divergence, MACD, can provide more robust signals. When the price hits the lower channel line and the MACD shows a bullish crossover, the MACD line crosses above the signal line. It confirms a stronger buy signal. Conversely, when the price reaches the upper channel line and the MACD shows a bearish crossover, the MACD line crosses below the signal line. It reinforces a sell signal. Risk management. Effective risk management is crucial when using the linear regression channel. Stop loss orders. Always set stop loss orders just outside the channel boundaries to protect against unexpected market movements. Position sizing. Adjust your position size based on your risk tolerance and the distance between the entry point and stop loss level. Diversification. Avoid putting all your capital into a single trade or indicator. Diversify your strategies to spread risk. That wraps up our guide on the Linear Regression Channel Indicator. If you found this video helpful, please hit the subscribe button and press the bell icon so you never miss an update. For a more in-depth info on this indicator, visit our website at brokercheck.co.za. Thanks for watching and happy trading.